much. With me, as always, Anuj and Sonia. Well, it's not very good market cues that we are getting over as handover from the US or from Asia itself. The Fed minutes are being read as a verdict from that organization that the US economy is not yet in ship shape. As well, the FISL number is not very exhilarating at this point in time for an Indian investor. More importantly, I think the fall in crude prices is going to at least ameliorate the impact on India. When there is a risk-off and when there is a feeling that the global economy and the biggest economies, US and China, are not in ship shape, then there is going to be risk-off everywhere. But the blow may be lighter in India. Yes. But for me, there is something very big that the market has to take note of. It will perhaps, it's not a very market-moving event in that sense, but it's certainly game-changing, life-changing. The payment bank licenses cannot be taken lightly. It's definitely a revolution on the cards.
Oh yes, it is, and we will talk about that in greater detail in a bit. But before that, on the global markets, for now it seems like at least the FOMC minutes indicate that there's no September rate hike coming. That has been pushed forth either to December or to January. So that rate hike fear is out of the way, at least for now. So we look locally, and locally, as you said rightly, there's quite a bit of selling that we did see by FIIs yesterday. So there was about 424 crores of selling in the cash market. There was about 500 crores of selling in the index futures, and there was delivery-based selling that we saw in a lot of financials as well. So whether it was SBI, whether it was Axis Bank, Bank of Baroda, there was about 100 to 150 crores of delivery-based selling there. So maybe we could see a bit of turbulence in the markets today, especially in some of these pockets. But Lata, what about the payments bank itself? I mean, that entire news flow has played out now. What are the stocks to watch, and what does the broader picture now look like?
Yeah, I mean, I'm really interested in the broader picture. Stocks may move any which way today, tomorrow. That's another matter altogether. And to be fair, the payment bank is not going to mean more money for Bharti or more money for LGO or more money for SBI or ICICI anytime soon. It is more like, when ATMs came, the banks just offered it as a service. So this is going to change the way in which we tackle cash altogether. Probably cash gets phased out of our lives, and all that could happen in a matter of maybe 12, maybe 18 months. What gives me a lot of hope is that the best entrepreneurial talent in India has been roped in. I mean, it doesn't get better than Bharti, Reliance, Mahindra and Birla. Yes. As well, all the telecom companies and startups. The fact that a license has been given to Paytm, and then there is a clause in the press release which says that very soon we will take the learnings from what we've got so far and from the first operation of the licenses and make it on tap. So you can just imagine any number of the Bangalore startups and the Chennai startups we spoke to could be applying for various applications which are built on the payment banks. So I really feel like an Alice in Wonderland at this point in time. We're on to something big. We never realized when the mobile phone was introduced in 1996, I think. In 1996, we paid 16 rupees for a call, and I had that big Motorola phone, which Dow Jones Newswires gave me because I was working there. I never realized that we were standing on the threshold of something hugely revolutionizing, and after that, I never thought there would come a time when drivers, maids, or vegetable vendors will all be transacting and changing their lives in the mobile. My sense is something like that is what we are sitting on. It is not to be measured in stock market moves today and tomorrow. It is to be measured in the way life changes.
Okay, well, that is a big, big development that has taken place. But getting back to our own markets then, Anuj, yesterday we saw, quite a bit of selling in the cash market. You were talking about, in closing bell, you were talking about how, we could see a gap down opening. Yes. If that does come about, then do you think that could sustain?
Morning, Sonia. Yes, look, the reason for predicting a gap down yesterday was simple because the global markets were trading at the low point of the day when we were talking. Europe in particular, the market was getting a bit nervous about Fed minutes, and there was quite a bit of put option build up. So it was telling you that, and it's been telling you for last 3 or 4 days that the way to play this market is to take a bit of a counter trend position on the day. So as of now, the global setup is the big risk to this market, and options data, as I said, was predicting a bit of a gap down. Key question is, yesterday the gap down was bought into. Will today also the gap down be bought into? That really is the big question. I was quite sanguine about yesterday, that yesterday the gap down would be bought into. I'm not as sanguine about the gap down being bought today.
Because of the global cues?
Because of global cues and because of 2 or 3 reasons. One, when a trade becomes so simplistic, it's taken out normally. When it's almost as easy to make money. You normally see 1 or 2 days where it's completely taken out. Second, if you go by the fact that you're now left with 1 week of expiry, now these kind of moves could be trend moves. So, yesterday, for example, the data is bad. FI sold 400 crores in cash market, even though DIS bought. And I could clearly see, from private financials like HDFC Bank, Axis Bank, a lot of money shifting to pharma and IT stocks. That's clearly, telling you that the smart money is preparing itself for a bit of safety. And the safe haven buying is continuing for last 2 or 3 days. And yesterday, while the currency was up, still you saw IT and pharma buying. Otherwise on days where rupee is falling, you can attribute IT and pharma buying to only rupee play. The fact that yesterday's buying accompanied with rupee's strength was telling you that this is a bit of a portfolio move in terms of getting into the safety of pharma and IT, stocks like Sun Pharma and all. Secondly, the kind of selling that you saw in index futures yesterday, till now you were seeing long unwinding. Yesterday was the first indication of fresh shorts. Yesterday, if you take a look at the FI data, 520 crores of index futures selling. In that, 4,900 longs were unwound, but 13,500 fresh shorts were added. Look at the options data, net buying of 500 crores in index options, and in that 12 index puts were bought for every 1 index call, with a lot of build up at 8,400 and 8,500. So I am not saying doomsday. This market is still in a range, 8,300 to 8,600. That range has been further crunched to 8,400 to 8,500. This market is fine as long as the Nifty is holding 8,400. The problem would only be if it goes below 8,400. As of now, the way to play this market still remains to buy big dips and sell big rallies, and there's a good chance you'll make money, though the only problem is that now we're getting into expiry, and expiry sometimes gives you a bit of a trend move. And as of now, it looks like there's a bit of a risk of a downward trend move as we head into the expiry week. The other point is that what could do well today? Again, crude-related stocks, paints, tires, oil marketing companies. Anecdotal evidence is with you. This is a trade that's worked well for you. On days when crude is in big decline,
buy HPBP.
Buy some of these stocks with your stop losses, maybe covered calls. You can sell some of the higher level calls if you're buying futures, or you can buy some puts to protect your positions. But this is a space that's going to do well, maybe.
All right. Yes, in fact, the fall in crude is now starting to worry a lot of people globally because of, the big crash that we've seen in the huge oversupply. So as of today, if you just pull up both NYMEX and Brent, NYMEX is just at the brink of $40 per barrel, which is the lowest level it's seen in the last 6 years. So Brent as well is now below $47 per barrel. So now it's getting alarming, the fall.
There's no taking away from the fact that this is a risk-off call, and India at this point will stop behaving like a beneficiary of lower crude and rather as a casualty of the risk-off.
Yes.
Oh, there is no growth in China, weak growth in the US, and therefore we would actually move down along. There's no taking away from that. My small point is that we will be outperformers.
Yes.
In the relative fall, we fall less.
All right, so let's see what these stocks do, the beneficiaries of the fall in crude prices. But these are all the top stories that you'll get to see on our show this morning. Our guest editor, yes, we have a guest editor today, Aditya Narayan, the MD and India strategist at Citi, who remains quite optimistic on the market. So he'll join in to talk about the micros and the macros. He will also quiz a host of corporates and sector leaders. So we'll discuss the impact of digitization as well as the green flag to payment banks with Deepak Gupta, the joint MD at Kotak Mahindra Bank, and Vijay Shekhar Sharma, the founder and CEO of Paytm. One of Aditya's most bullish themes is the awarding of road contracts, and we'll talk about the outlook for FY16 with Road Secretary Vijay Chibbar, Satish Chandra, the Director of Finance at NHAI, and V.D. Mahaiskar, the Chairman and Managing Director of IRB Infra. That's not all. Joining in to solve India's demand puzzle is R.C. Bhargav, the chairman of Maruti Suzuki, a stock that Aditya continues